Welcome back to another video. So NAT reported their fourth quarter results and just take a look what their stock price did. And that's basically all you need to know about how their fourth quarter results were. Relative to other tankers, they were absolutely crap. I was, expecting a pretty bad quarter, and they delivered on a pretty bad quarter. So we're going to go through these results. I'm going to give my take. So I basically bought into NAT last year on the hype, and I'm down by about 45-50%. It's my worst performing position, basically one of my very few positions that are actually in the red. And again, I'm going to be holding my shares because I do think that this company can turn around, and now is not a good time to sell because we're nearing the most market pessimism for oil tankers. Okay, so I just want to start with some comedic relief because I feel like as NAT shareholders, we all need some comedy to get us through. But with any comedy, there's some truth to it. So kind of funny and sad at the same time. But here we go from Richard from Yahoo Finance. The headline of the public relations should read, NAT reports lowest fourth quarter 2020 time charter equivalent than every other tanker company that has reported, and gives no information for TC earned so far in Q1 2021, which should be presumed to be even lower. NAT increases borrowing by $30 million from its lender just to use for general administration purposes, just stay afloat and pay a paltry dividend that has been reduced by 50%. NAT also sets the stage to issue another $60 million in share dilution in the coming months for no stated purpose, but probably in order to just stay afloat and pay general administrative expenses. NAT gives no guidance on what it intends to do with a third of its fleet, which is nearing the age when every other responsible tanker company stops trading them and sells them for scrap. Okay, so obviously this guy is very pessimistic, and there is some truth to it, but hopefully I can dispel some of those saucy comments there, okay? So again, not a good day for NAT on Friday after they reported earnings, down 7%. And let's just take a look at the overall letter here. So dear shareholders and investors, so during 2020, we distributed $67.2 million in cash dividends and repaid our existing loans with a gross amount of $75 million. So that's one good thing, is that their debts were actually down on the year, which actually increased total shareholder value, as we'll see in the report. So the first half of 2020 was a strong period for NAT. I think that's the understatement of the year here. Is the first half of 2020 was really, really good as crude oil actually went negative, and there was an oversupply of oil. So these vessels were just storing oil, not even transporting oil. The third quarter of 2020 came out positively with a time TCE of about 25,000 per day per ship. And just so you know, NAT operates solely in Suezmax vessels, and that's a pretty good TCE for Suezmax, I'd say. The fourth quarter of 2020 was weak. That's also quite an understatement. It was absolutely horrendous. We undertook planned technical maintenance of our ships during softer market periods of 2020. So what that means is dry dockings, vetting, etc. So when the market is low, they took advantage of having their ships in the dry docks and being maintained, okay, which is really, really good, and that's one of the positive moves. But again, that makes sense. Every company does that. At the time of this report, the market has improved, and we believe that we are close to a significant positive turnaround. So I actually think they're going to announce better Q1 results, Q1 2021 results, than they did Q4 2020 results, okay, unlike the guy on Yahoo Finance. So the full year 2020 produced a net income of $50 million, or an EPS of 34 cents. So that's not bad. This is an improvement of about 60 million in 2020 compared to 2019, which produced an earnings per share of negative 7 cents. Okay, so again, not bad at all overall for the full year 2020. We see strong oil demand, in particular from Asia for 2021. This is good for us. Oil will be required to improve standard of living for millions of people worldwide. Very true, especially as we transition to electric vehicles and electric everywhere. We're going to need a lot of oil to actually build that infrastructure. So as the spot prices rise for precious metals, nickel, lithium, etc., so two, does the price of oil rise? Just look at the price of oil right now. It's above $61 a barrel. And I mean, even just like a year ago, it was like 20, 30 bucks. Okay. So in the final quarter of 2020, we concluded the financing of two new building Suezmaxes, which we ordered in September 2020. In December 2020, we expanded our senior secured loan with our existing lender in Texas for $30 million. And 11 of our vessels were taken through scheduled dry dockings, etc. For 2021, we have 4 vessels for scheduled dry docking with our fleet, is as such ready for recovery. So what they're saying is that they're reducing the dry dockings to take into account the recovery of the oil tanker market. Our top quality fleet, as evidenced by vettings undertaken by the oil companies, performed technically well last year. So even though their ships are incredibly old, apparently they're good enough to still be functional on the oil tanker market. Okay, so the reduced oil production from OPEC during the fourth quarter of 2020 affected our earnings. The average TCE was $8,700 per day per ship. So the guy from Yahoo Finance also said that they had the lowest spot rates at $8,700 per day per ship. And let's just go from frontline fourth quarter earnings. And he is correct. This is just one example, but their Suezmax vessels for Q4 had a TCE of 9,800, so significantly higher than what NAT reported at 8,700 per day per ship. So there is some truth to that there. We see that the market is finally balanced and that there are clear signs we're going into a stronger market. So again, they paid 45 cents per share in cash dividends. And they also announced it is a paltry 2 cents per share dividend. So I have 350 shares. So times that by 2, that's 700 cents, which is $7. So I'll be earning $7 for my dividend for the fourth quarter of 2020, which is payable March 12th. Okay. So with improved earnings, higher dividends can be expected. So the situation has not impacted us to a significant extent. They're still alive. Detailed financial information for the full year 2020. Q3 and Q4 is included in this report. Okay, so that's the report. Let's just take a look at their actual report. Again, this is what we just looked through. And again, their fleet now consists of 25 Suezmaxes, which carry 1 million barrels of oil and has 2 new buildings. So it's good to see that they're introducing some young ones to their fleet. We take extra care to maintain our vessels to the highest standard of care for safety, crew, cargo, etc. So the outcome of our inspections have been good. So again, maybe that's why they have incredibly old ships, but they're still able to put them on the market and they're not scrapping them yet. So again, they just say the same thing here. NAT has one of the largest fleets of Suezmax tankers in the world, et cetera, et cetera. And they're running on IMO compliant fuel. So here's the deal. For the full year 2020, net income was positive with 50 million. Again, we already said that. This compares with a 2019 net loss of 7 cents per share. But let's look at the current quarter. Oh, and of course, cash dividend. For the fourth quarter 2020, the net loss was 28.7 million or 19 cents per share, compared to a net result from the previous quarter of negative 7 cents per share. So I think actually Q1 2020 will be around the range of, it'll still be negative, but it'll probably be maybe like, I'm going to give it negative 5 cents to negative 12 cents per share. Okay, that's my range. Okay, you can quote me on that. I'm actually going to write that down after. Negative 5 to negative 12 cents, I think will be Q1 2021. So again, they lost even more money than third quarter of 2020 because, of course, the spot rates were even lower. And they talk about their financing here. What I want to focus on is they actually issued close to 1 million more shares during the fourth quarter right here. And this is concerning because this is known as share dilution. As you have more shares on the market, it takes a higher amount of buying pressure to increase the stock price. Okay. So they got 3.1 million under the 40 million at the market. So the 40 million at the market established in 2019 has now been fully utilized. So what that means is they were able to issue shares up to $40 million of net proceeds, and they have done that. And this is, again, another concerning thing is that as on October 16th, 2020, we established a new 60 million at the market facility. So what that means is more share dilution is coming, which is kind of concerning. But again, I think this is very common, especially since they're financing their 2 new buildings They're losing money right now, so they need to keep afloat, and so it's pretty common. Okay, and again, they announced at 2 cents per share, which is it is true. The guy on Yahoo Finance was right. It is 50% of what we experienced in third quarter, where they issued 4 cents per share, which is still only like $14 for me. And so let's read their executive summary. Okay, Mr. Hergy here, Herbie, I guess. Let's see what he has to say. What is good for the world economy and world trade is positive for the crude oil tanker business. Correct. Our long-term positive view on the tanker market remains the same, but the global pandemic has, in our point of view, delayed it by months and not years. So they're saying that the world will be emerging out of lockdowns, and people will be able to once again go travel, and there'll be a boom to oil and other commodities. The lockdowns around the world has led to a pent-up demand for many goods and services that will flourish once the vaccination program gains momentum this year. The demand will, unlike wars and financial crises, be met with an unharmed physical and financial infrastructure that is ready to deliver on all cylinders. Okay, so they're saying, once the world emerges, the world is firing on all cylinders, which is also a problem for inflation, but we'll talk about that later. With oil being an essential fuel and raw materials in delivering welfare and improved standard of living, this is good news for the tanker market. In this respect, we see very encouraging signals of improved Asian economies, boding well for the world economy and the tanker market going forward. So again, that basically sums up, and I honestly have to say I agree with Herbie right here. Okay, so I think personally that now is, if you're holding NAT shares, you're like me, you're down like 30 or 40% because you bought into the hype. Just hold your shares, okay? There's no issue in holding your shares, because I do think, despite NAT having questionable corporate governance, it still is a good company to own right now, especially if you can buy shares right now. I mean, I would obviously consider looking at Frontline and EURN, but I do think that, again, once the world emerges from this, the oil tanker market will be stronger, okay? And let's just keep on going here. There's nothing going on here. So they're saying also that there's a muted current delivery of Suezmax vessels. We currently see 16 conventional Suezmax tankers for delivery this year, 27 for delivery in 2022, and 1 delivery from the shipyards in 2023. Okay, so again, they just explained their business model basically. When there are too many ships, rates go down. When there's not enough ships, rates tend to go up. Okay, so again, the spot rates are volatile. So let's just take a quick look at their balance sheet here. And again, their net voyage revenue was down from even the third quarter, from 37 million to 16 million. However, overall in the year, of course, it was higher because of a nice Q1 and Q2. And again, they lost 19 cents a share compared to 7 cents a share on the previous quarter. And we can see an increase in the amount of shares from 150 million to 151 million, basically. Okay, so again, not what I like to see, but let's look at their total current assets here. So you can go through these here, but it's 99 million here plus 874 million, which they got 861 million from their vessels. And in total, that gives you total assets of 974 million as compared to 1 billion in 2019. Okay. And so let's see, and the shareholder equity actually increased from 595 million last year to 599 million this year. Okay, and that's because their liabilities actually went down. Okay, so accounts payable went down from 8 million to 4 million. Voyage expenses went down from 11 million to 5 million. Current liabilities went from 15 million to 8 million. And by the way, voyage expenses are down probably because of the intensive dry docking schedule. And long-term debt also went down from 23 to 22 million. And long-term debt went down from 375 million to 334 million. So again, it's nice to see that their debt's going down, and even that shareholder value is actually going up. Okay, so that's good to see. Although they're issuing more shares, so again, more diluted. So basically, that's all I have for you today. As you know, I'm going to be holding my shares. I don't think it makes any sense to sell now, because I do expect a recovery. Again, just like pretty disappointing Q4 results, which is why NAT specifically went down. All the other tankers who reported, their stock price actually stayed the same or went up during the week. But NAT always, of course, always impresses us. So yeah, anyways, I just wanted to go through with that with you today. I mean, I guess we can check out Frontline and how they did. They were actually down by 4% actually. So I guess the whole tanker market was down. Maybe it's, just NAT was down more significantly. Let's check out EURN here. It was also down 3%. Okay. I wonder why. I'll have to look into this more. But anyways, that's my tanker market update of the week. Q4 results. NAT baby. Let's go. All in NAT stock. Just joking. Anyways, take care. Be sure to subscribe if you haven't already and give this video a thumbs up. You can also check out my interview with Peter Klampika of Cordia Kitchens down below. I'll link it in the description. Take care. Let me know if you have any questions. Peace. Love you all and take care.